below LehmanBush will be the Kaspa fund, which will be a Kaspa qualified investment fund. This fund will have just the long-term investment horizon, like Kaspa as a treasury. We're targeting up to $500 million in value. We have discussed also with the custodian, which is a very reputable custodian, an American custodian, almost tier one with a banking license. LehmanBush was founded in the early 2000s with Dr. Edward Lehman and Mr. Neil Bush, son and brother of former US presidents.
Supported by Kaspa Finance, the first V3 DeFi protocol on Kaspa. Igra Labs, atomic programmability on a Kaspa block DAG.
Hey, Angel, you'll be our first lawyer on the podcast, so welcome and great to have you over.
Oh, thank you so much for having me. Yes, I am an attorney. I'm a lawyer. Nothing here is financial legal advice, obviously. But no, yes, I'm Angel Puente Reyes. I am from Ecuador. I was born in Quito. I practiced law for around 15 years. I lived in China for over 5 years. I did my master's degree in Beijing in China University of Political Science and Law and Comparative Law Studies. Most of my clients were Chinese. I did like cross-border investments between Latin America and Asia for different industries, mostly infrastructure, energy, some other technology and pharmaceutical ventures. So I was mostly on the legal structuring side of things, and then I got more interest on the investment side and private equity. So while pursuing my PhD, I just handed my thesis last Friday. I just finished my thesis on compliance on digital assets and crypto. So, which is the fancy word for using crypto. And so that's a little bit of my background. Now I serve as a director to LehmanBush, which is a full advisory private equity firm based in Hong Kong and founded by Dr. Edward Lehman, who's an American attorney that lives in China for over 3 decades. He had his legal practice called Lehman, Lee and Shu, which is the first law firm in China to be owned by a foreigner, like a fully licensed firm. And like he's an OG lawyer in in China. Like most of the international American, US, China deals, like he has like a incredible reputation. And LehmanBush was founded in the early 2000s with Dr. Edward Lehman and Mr. Neil Bush, which is the son and brother of former US presidents. So that's what LehmanBush is. And I, 7 years ago, I started becoming an advisor to their platform. I was doing some of counseling. Also, I serve as the director to the Latin American desk, and now I'm living in Lithuania and in Europe. I was like, I'm part of like Baltic and Latin American advisories. But just a couple of months ago, we activated some mandates on the energy industry, and this is traditional private equity things, nothing to do with crypto. And because of this, now I am leading the initiative to open a fund manager in the UAE, which will be called in the future LehmanBush Capital. And with LehmanBush Capital, ideally we will manage a qualified investment fund in Kaspa. So more of that later. I found love in Europe. My wife is Lithuanian, and I came here because I had a startup initiative, and during a year of the year off that I had, I even opened a chicken rotisserie in Vilnius for 6 months, and I was a Kaspa merchant, which is interesting enough. Within the span of 12 months, I passed through cooking chicken for a living to ideally person. But yeah, that's a little bit of how beautiful life is, and yeah, that's my background.
There is so much to unpack. So why don't we just unwrap a little bit here, and then we can go through the flow of questions that are put together for you.
Sure.
And I'm definitely excited to hear more about the fund part that you've set up with LehmanBush Capital in UAE, right? That's the name?
It will be called LehmanBush Capital, correct?
And it's UAE, right? You said
it will be incorporating in Abu Dhabi. So
Abu Dhabi, right?
will be in the Emirates. So Abu Dhabi will be before the Abu Dhabi Global Markets Authority, which is the ADGM authority. And we are currently in the process of applying to it's called the in principle approval, the IPA, IPA. So this in principle approval gives you a preliminary screening from the authority, and then you go for the full incorporation. So we hopefully are looking at first quarter in 2026, January or February, to have this IPA and proceed with the full fund incorporation. And that's a little bit of background.
Yeah. Oh man, I'm keen to hear more. But just quickly though, can we go back a bit and discuss a little bit about your background first? I know you've mentioned everything, but you've studied international law, right? How did you end up from there to crypto? And obviously, then you've just done some PhD also. Why don't you tell us your journey leading crypto?
What happened was in university, in UAB, University of International Business and Economics, where I'm studying I'm finishing my PhD. The degree is on international law. So for the PhD research, you're open to do your research in any international law topic or any legal topic that could be of interest.
Right.
I chose cryptocurrency, like compliance on crypto. So
was it a topic? Was it a specific topic, cryptocurrency and compliance?
Topic was not okay. The specific topic is compliance on digital assets, the soft word to crypto, because at the time when I started my study, until now, basically you don't have a legal framework, a consensus on digital assets and crypto, right? And when I first started, there was very, very, very much less done. So during all these years, it's been very active. So obviously, we have seen with my supervisor at least how the space has developed in different jurisdictions.
So you started studying this and specializing in digital assets, but when did you actually yourself got involved in crypto? Because obviously you're a advocate for Kaspa, ambassador, you call yourself intern, right? But what's your personal journey from studying to obviously implementation as such?
Okay, so first time or second time, just kidding. Okay, first time I heard about Bitcoin, it was in 2011 in Shanghai.
Right.
And I was like, I mean, I have this huge regret. I was having a conversation. I had on my right this guy is talking to me about oil fields, and I'm friends with this guy. So I'm from South America, from Ecuador. So we were talking about oil, and I was like very into this discussion. And there's a crazy guy that also is talking about Bitcoin and tried to tell me this peer-to-peer network payments and so on. And for me, listening to this guy sounds like a Ponzi scheme or scamish or like super dodgy. And the guy looked very, very crazy to my extent. So every time I remember this 2011, it was so painful, and I just tried to forget. But I was probably.
What were you doing in China? What were you doing in Beijing? Did you say right? Beijing.
Yeah, 2011. No, Shanghai. 2011.
Yeah.
Before I studied in China, I went there twice for seminars. So they were organized by the Ministry of Commerce of MOFCOM of China.
I see. Right.
So I was just having this conversation, and I still have the phone number from this guy, and I always remind him that his friendship to me is very expensive somehow.
Right.
Yeah. I was properly introduced to Bitcoin on 2016 by a friend of mine who lives in Panama. Hello, it's called Isaac Lalo. So this guy is talking to me about Bitcoin, explaining to me with his hands and talking about, salt and monitor systems and all this kind of stuff. And then he helped me setting up my first crypto wallet. But at the time I was living in Ecuador, and there were no ATMs. I didn't want to use like local Bitcoins. It was like very, very, very small amount of people use it. But I was looking at it, and actually I was very interested. So in in a trip to the UK. I was going to Glasgow for a distillery tour on different whiskey distilleries, and in Glasgow there was this very OG gaming shop that they had a Bitcoin ATM. I think they were banned after a couple of years. I think it was called Sex or something. I don't know. I don't even remember. But there's very cool gaming plays, like super cool guys, most likely OGs now. And these folks, I bought my first 20 pounds in Bitcoin. And even though it was like, clunky and tricky and all these, looking at the confirmation of the address and all this kind of stuff. But when it actually went through, late, like a long time after it went through, it blew my mind. And it was this aha moment, which is okay, this is a payment that went through without a bank. And for that is relevant because I come from Ecuador, South America, where, banking institutions are not very friendly. And overall, the investment is not open to everyone. That's what I love from crypto. If you look at Latin America, where I come from, for example, from Ecuador, if you put your money in the bank, as most places in the world, the interest will be very, very small, right? That you will pay to you. If you want to go for a loan, you will pay with between 8%, 10%, up to 12% interest rates. And if you go on a credit card debt, you can go 25%. And if you want to, let's say, we don't have in Latin America, most countries, at least while I was growing up, you don't have these, 401ks or IRAs, where you could have these structured financial instruments that you could have, savings from day one.
The retirement funds,
exposure to index funds and have compounded interest. And by the time you are 30, 40, 60 or something, you have a sizable bank. And in Ecuador, you have a like stock market, which is kind of tiny, and then also brokers are not cheap, and you have to go on certain investment ticket, right? So for that to make sense.
Makes sense, yeah.
So now that the new fintech era came in, and you have lots of stockbrokers and something, that's kind of cool in a way because people have exposure to other forms of investment. But what I like the most from blockchain cryptocurrency, it was the freedom and the libertarian way of I can have my capital. I don't need to trust in any institution. I can have my assets. I can have my savings. And then when Ethereum come in and it was mostly like interest about like crypto 2019 and so on, and in the DeFi after the DeFi summer and so on 2020, most of my allocation was Bitcoin and Ethereum, and a little bit of alts like Aave, Uniswap, this kind of stuff, like the blue chips, right? Chainlink and all this kind of stuff. So I came from the Ethereum world. Most of my my peers from crypto Twitter, they were Ethereum people. We were like those guys are hardcore degens. Like some of them, they are like creating vaults and protocols and things. And we had discussions on spaces. And I met a couple of these folks in person. But we were doing, degening stuff on liquidity pools, looking at different cool stuff.
Awesome.
And I love that part of freedom that in sense of the blockchain can give it to you. And that's how we started. And that's how,
I see.
The journey started.
The journey started. So now take me through, how did you discover Kaspa, coming from or spending most of the time within the Ethereum DeFi world?
Yeah. So Kaspa came to my life thanks to my brother. Big shout out to him, Juan Jose. He's the one who introduced me to Kaspa. And the thing is, I think it was because it was my brother that I managed to look into Kaspa. I'm telling you, I came from the Ethereum world, and most people, let's say in crypto Twitter, they have already this anger against other communities, or they are, part of a particular community. They're no open-minded. And when you hear someone shilling you a project or just telling you about any XYZ stuff, your response is usually very defensive, in the sense that, okay, this is either a rug pull, this is either insider trading, this is already, another pump and dump. And you have all these Telegram people, these trenches, all this kind of thing that, it is what it is, it's freedom, right? But within this ecosystem is very hard to actually take your time to look into this. So my brother was coming after me, and thanks God, he was coming after me every single week, like a Jehovah Witness. He was coming like, "What did you have, Kaspa? Look at this. Did you confirm this?"
Really? Right.
Like every single week. So annoying. And at the time, I remember like the first 2 or 3 times, I was like, okay, I opened the chart. That's what I did. I opened the Kaspa chart,
As
and
you do.
I didn't look further. I was like, okay, this, it looks okay, whatever. Boom. That's it. That's it. So it takes time to do research. I mean, it takes time to put yourself against difficult situations. And I think, as most Caspians, I guess, the more you look, the more you put yourself into this discomfort to like look for something new, is the most you get in love into this, because it's just mind blowing. So yeah, I mean, that was that.
Yeah, which year was this when your brother introduced you to Kaspa?
No, this was okay. He started talking to me about Kaspa last year.
Last year,
So
right?
we started DCAing into Kaspa from January this year,
Oh,
2025.
beautiful, beautiful. Yeah.
It's new. So I basically after, I think it was after summer or something, like more than that, I rotated most, like all my crypto to Kaspa. I don't own any other altcoin or any other coin.
Man, that beautiful story.
Forward to like build IGRA Labs, like an IGRA document, like just as a side, a small bag on the future. But I don't. My allocation is 100% gas.
Right, I see. I love it, man. This is great. So why? So what? Just quickly, I want to get into the regulatory side, or the experience that you have had, and sort of the exposure you have had, and obviously talk about the fund. But just quickly, so why did you decide to call yourself Kaspa intern? That's very, very cool. But what's the meaning behind it?
Yeah, it was just about, I was very passionate about the project. I think the community is very vibrant. It's very cool. And there was all these discussions around, ambassadors and about the faceless of Kaspa and so far. And I said, okay, I don't need a title. I don't need nothing to just go after everyone and just tell things about, Kaspa in a free manner. So I just, I'll like call myself an intern, and I changed my ex handle is Kaspa intern. And that's how it came out. And
I
yeah,
see.
that was a way of spreading the world and spreading the word in the
Yeah,
most
yeah. I remember early on when we were doing XXIM was doing actually spaces. We did a lot of spaces actually early this year, March. You used to come up all the time as Kaspa intern would have been your handle at that time.
could be, yeah.
And then obviously you changed it to Golden Sparrow afterwards.
It's always been Golden Sparrow. I mean, from it was Golden Sparrow that eats like all life, like most of it. But it was now it has a slash. Yeah, Kaspa intern. Yes.
I like it. Anything, I guess, on the historical side that you want to that we can discuss now before we move on to the regulatory part and spend a bit of time there, I guess.
Yeah. So I discovered Kaspa because my brother. I did this research on Kaspa, and I got absolutely stunned. I think Kaspa is just a change of paradigm. It is innovation, it's vision, it's I think it's intellect at this peak. For me, Kaspa is like a powerhouse of innovation. That's it. So for me, it was a no-brainer to just try to do something around Kaspa, try to build something around it. And for now, some of my endeavors are somehow related to Kaspa in a way. It will be.
What made you really consider Kaspa? Like, what was there that you found that was quite unique and innovative? Different people have different reasoning, but what was your reasoning to really consider Kaspa seriously?
Okay, so my aha moment obviously was sending a transaction. So whenever you send a transaction, I mean, in 2020, in DeFi summer, I remember swapping Compound and paying for a swap $1,000 on a swap. This kind of stuff happens,
Yeah.
like fees. There are like crazy fees on the layer one. So and the speed, and then you happens that for some reason you pay some fees, and then the transaction doesn't confirm. So for me at the beginning was just the how useful it is in terms of a transaction layer is brilliant. Yeah, and then of course I saw the 1 block per second visualizer, the 10 blocks per second, and you see how crazy this could escalate in terms of adoption. And now looking at the architecture, like Igra Labs, BProx, I think it's Kaspa is this infrastructure monster that will just be beyond any sort of competition in terms of efficiency. So for me, I live through the internet world that you have this the cable computer, this cable to the computer, and you ring this, you have this noise while ringing the internet, and it goes so cracky and it was really bad. And you have these really bad searching engines. And it's like at that time you discover Google. So that's what Kaspa is to me. For me, it's utility, it's just efficiency. And for that, I consider it's better. But then if you look at, the vision, the originators, all the 10 plus years of research and what Kaspa is in grounds of actual innovation, that's something that is beyond any sort of imagination, I guess.
Beautiful. Now, can we please discuss a little bit about the legalities and legal frameworks? And, I wanted to touch upon basically this, how the global monetary policy basically landscape has been, changing and transforming in front of us, right? Like it's a big thing happening across the globe, right? From US to Europe to, everywhere really. We're seeing this massive shift that's taking place. So I wanted to actually discuss with you, your, I guess, views and your opinions around those topics and what you're seeing. And really, I guess we can bucket them as one, or we can break down country by country. But really, I wanted to start from the US being the leaders and current, basically the current administration there under Trump, right, is pushing for more clarity, more regulatory clearances, I guess. And they have two acts or bills, the Clarity and Genius. And Genius, I think, has gone through both and is a law. And Clarity is still pending Senate approval. So what's your take on those two bills, I guess, or acts?
Okay, so first and foremost, any approach for legal improvement, for regulatory clarity, is positive. Now, okay, looking at both, you mentioned, okay, the Genius Act is the first federal law to regulate stablecoins, and it does in a matter that it says, okay, you have to have a stablecoin has to be backed 100%, right, on its collateral, and it should have the treasury should be composed of either US dollars or short-term bills. Then, and then you obviously have the Clarity Act, which is pending approval, as you mentioned, and it will bar, for example, for issuing CDBCs, which is a good thing. But then you have to understand, okay, look, you have a legislator, and behind the legislator, you should understand what are the motives. So in the US, you have this lobbying on, private companies pushing for the legislation. Everyone is trying to do their best for the best, right? And then you have to understand not just the motives, but also what are the nuances of this. I mean, it's great that Trump is trying to push crypto. Is my crypto president, he's pumping my backs. But then this guy launched, so and there is very spooky announcements on a weekend that they have some particular effects in the market. And then you will say, okay, presumably we could be speaking not just about, trying to shape legislation, but maybe unprecedented corruption and insider trading as well. So we don't know that. The history might say different. But then if they need the big issue for legislation, and this is what I say in my PhD research on compliance and digital assets, is if you are the regulator and you want to regulate an activity, you should understand what that activity is. So you should push for technical legal frameworks rather than just private company corporation pushed interest agendas. And in a practical manner, why this is more relevant is, for example, the stable coins. So and this happens not just in the US, also in Europe and other jurisdictions. If you just try to copy and paste compliance legislation on reporting for traditional banking and fintech in crypto, it won't end up well. And the reason being is, in crypto you have liquidity, for example. Just proof of reserves, like a Merkle tree, a snapshot is not enough if it's just a snapshot that is on, let's say, on a Friday. Don't put names to this, but let's say you're a big exchange, a global exchange, right? And you have to have your own coin as well, all right? Don't put out names. But this exchange technically present on a Friday a Merkle proof, a snapshot on the customer reserves, and it could, but in that same weekend, could collateralize their reserves, mint a stable coin, buying their own coin, their own coin that they have actually, possess most of the circulation supply, right? And they can dump it into retail because it's the only thing that is pumping when the market is crashing, right? So we're not giving names to this again, just saying. But then you can just take off, chop this money out of the market, and you can loop that 100 times, and you will make immense amount of money. But technically, on the law, you are compliant because you are reporting as often as the regulator sets you to report.
I guess you're highlighting a specific loophole with the centralized exchanges, right? But I guess the question I have is that even a thing? Like, I know in the US, I don't know if it's actually acquired. I know in Europe, MiCA, I guess, they might have this regulatory requirement for centralized exchanges. But outside of that region, for most of the exchanges that don't operate in the region, they don't need to follow any of that, right? Even the snapshot.
Yeah, the problem is, for example, MiCA, people will say, okay, let's talk about Europe. So MiCA, it is important because it was pushing for regulation at the time where, for example, the US administration was against crypto. So China banned crypto, the US did not have any clarity on crypto, and the Europe wanted to take the lead on this MiCA directive. And it's good because as a bloc, the EU wanted to push for regulatory clarity. The problem is due to bureaucracy, and because obviously this has to go to a directive on the European Parliament, this takes time. And then you have implementation issues in the sense, okay, there is, the national regulation, the NC in a country by country basis. Then you have ESMA, which is the European Securities and Markets Authority, taking care of certain things or not. And then the reporting, again, it follows traditional fintech and traditional, banking metrics. And it's funny because if you look, again, if you want to be a regulator, you should understand why you are regulating. I have talked, because of my thesis, I have interviewed managers, like top managers on global exchanges. And you ask them, what's the difference between a mixer and a relayer? And they don't know what you're talking about. or most of them won't know what is, a hardware wallet and a hot wallet with sort of difference on custody. And that's super dangerous in the sense that, for example, in Europe, if you look at October 10th, okay, more than $10 billion were washed out of the market. If a national bank, let's say in the small countries in the Baltics, they screw up on regulatory clarity, the impact that could have is in the three Baltics, let's say Lithuania, Latvia, and Estonia. That market crash represents 5 times their GDP.
Yeah, I was going to say.
So those folks, they don't have a clear reporting. MiCA talks to you about quarterly reporting. So people say, okay, no, MiCA is the most sophisticated legal framework. I would like to say the opposite. MiCA is coming from the Stone Age, because most of these standards should be reported on a live basis. And for example, here you have incredible solutions that for proof of reserves, proof of composition is meaning like how your asset is composed or distributed. and proof of liabilities. And you could have a system in which you have a live reporting of on-chain data and off-chain data. Because if you want to, again, if you want to be an exchange in this market, if you want to be a stablecoin issuer in this market, meaning you want to profit from the public and get fees from the public, you should put yourself to the most high scrutiny. Otherwise, you shouldn't be going for a license at all. And for this, you have, for example, Chainlink automated engine system. You have also Chainlink CRI, and these Chainlink systems that feed data on a live basis, on-chain data and off-chain data. And this is relevant because as an institution, you could have not just your on-chain proof of funds, but you could have on-chain liabilities. And this be on a weekend, very short basis. You can have SPVs with contracts. You can have various debt obligations that could actually impact your treasury and your balance sheet. And that could be reported again on a second basis. And what system you are thinking about that could be, sub-second confirmation and really fast and, reliable enough for proof of work system that could carry that information. So for me, if you implement those protocols like Chainlink protocols on automated engine compliance, and you put it available into Kaspa Infrastructure, you will make a killing because you will have a reliable proof of work system in which you can make live data reporting on things that are absolutely relevant. There is an argument to be made that's saying, okay, if I am a new sort of technology startup, new cryptocurrency company, that I am, less than 4 years of old, or less than 8 years old, or less whatever years old, why should I be subject to more control that, a bank? Thing is, if you look at the size and the impact that this industry could have, if they want to engage in this business, they should be regulated with the most rigorous tests. And again, it will be ideal that those same banking institutions and those same, financial institutions adopt a live data reporting, and that could be done in a proof of work network, sub-second confirmation. Yeah. And that's why 10 blocks per second is important. That's why 100 blocks per second is important, and so on. But again, that's what I think the future will go. Now, because to my understanding, liquidity, it should be like an oxygen tank. You want to know how much is left, otherwise you're gone. So,
yeah. I think it's a very beautiful topic. It's a topic that I would like to discuss entirely on its own. I think we can have a separate session.
Then you have the counter argument. I mean, not because I'm talking about compliance in crypto, everything has to be regulated. For example, for me, I am one of the persons that I defend decentralization and privacy to be out of the compliance reporting stuff, because that's freedom. If you want to have your privacy, you want to have your savings, you want to interact with a decentralized network, with a decentralized protocol, you could do so. You don't have to KYC. That's ridiculous. If you want to go to an exchange service, like you want to touch financial service, off-ramp service, and so on, of course, obviously you have to go through a KYC, AML, and so on and so forth. But that doesn't mean that there's things that should be unchecked. For example, what is really cool in software development, what I've seen so far from different communities, is when you have open source software, that's in itself a self-regulating tool. And that is something that also has to be analyzed, because it reduces criminality. It reduces, the amount of, shadow curtains that you don't know what's behind the black box, and so on and so forth. And that leads to, and also in institutions, I mean, you will say, no, crypto is decentralized. You can look at the ledger. Yes, you can look at the ledger until you reach a centralized exchange. And then you don't know what's happening. And then from there is a black box. Then, it's gone. And if these folks, they have a quarterly reporting, if I am just telling you what they can do on the weekend, a quarterly reporting, that it could be like devastating. And the problem is, the moment one of these big guys goes down by doing things that are unlawful, the impact that will have in the market is going to be, catastrophic. So that's why it should be checked.
Yeah, and we've seen that with I guess many times before. But recent one would be FTX, Celsius, BlockFi, right? Those were the big things happen in 2022, and it was only a couple of years ago, right? Exactly same thing you're mentioning, that they were rehypothecating all the assets in one way or another without showing the proof of reserves, but still saying to people that they had the assets at hand. And FTX was the perfectly clear example of $50 billion that was going to the hedge fund while they were saying the reserves are still sitting at the exchange.
And the problem is, it's human nature. If you leave that door open, they will take it, because this is a money making business. People like to make the most of it, and they will take it if they have a chance. They will do it. That's it.
Yeah, it's unfortunate, but it is the ground reality of it. And I guess perhaps that's why we are seeing, a little bit of uptick in terms of people moving away from centralized exchanges. Not massively, but a little bit uptick, I think I've seen, away from centralized exchanges. So just coming back to, I guess, our broader topic here, you are based in Lithuania, but you are in with LehmanBush, which is based out of Hong Kong and mainland China, right? So what are you seeing in that region? What are you seeing in that region that's perhaps same or different from the other jurisdictions?
Okay, so Asia has always been regarded by very innovative space. For example, you have Hong Kong and Singapore being like international financial hubs. Maybe Hong Kong before 97, much more, and less, obviously. But then, without any political statements around it, I think China has very clear anti-crypto policy, mainland China. So they just, I think it was yesterday, they just banned China, like
just yesterday
again. So yeah, I mean, that happens. But then you have Hong Kong as a jurisdiction to somehow made some tests on certain matters. And they also have come up with a stablecoin framework. But to my understanding, okay, it follows a little bit Singaporean sandbox, this sort of fintech reporting structures that we're just discussing. And I think having something that is infrastructure-based, like compliance, is something that should be put forward out there. But yeah, again, if you want to compare both jurisdictions, I remember like in mainland China, if you go to a bank with cash and you want to change US dollars in renminbis, I don't know if you've done that before.
No.
I lived in China for 5 years. I lived half of the time in Beijing, half of the time in Hong Kong, right? So if you go to a bank to change currency, it will take you 45 minutes to an hour. So you better take a book with you or something. And if you change currency in Hong Kong, it will take you seconds, right? And in maybe that happened to me, that I live in this part of the world. When I first came to not Lithuania, first I came to Latvia. When I was in Latvia, I remember I went to I wanted to open my bank account. It took me 6 months to open a bank account. Maybe because I have a South American passport. But anyways, I mean, you can check someone's financial declarations that 6 months, a year ago, like whatever, and it won't take you like 6 months. So basically that's like, for me, it was insane. And then I had to choose, Wise and Revolut, because you can do it in a couple of days. Interestingly enough, I was an unbanked for a couple of months.
Why was that? Why didn't they let you? I mean, what was the reason?
It's bureaucracy. Yeah. And to open a company also like a month and a half. And Estonia, you can do a company in 15 minutes and like online, and that's kind of cool. But
yes, Estonia is the startup capital of Europe, right?
Yes, it's one of the most. I think unicorns and GDP ratio, like something.
I think most of the unicorns out of Europe is based out of Estonia.
But again, the problem is not like Estonia, Latvia, Lithuania as independent Baltic countries. They can push forward. They can try to have an ecosystem, but the problem is when you have like a very bureaucratic system, when you have like really high taxes and very few access to financial infrastructure, then you're done. So if you are like an entrepreneur, you might as well go to Asia, because Asia is more open. There is more dynamic things happening around. There is more financial access to various things. Ideally, you want to go to the US because of access to capital if you're a startup. But then now maybe in the crypto world things will be more regulated and so on. But yeah, that's interesting things happening for sure in Asia. But what I like from a regulatory standpoint, maybe on how dynamic it is precisely the UAE. And why is this? It's obviously we're opening our vehicle there. But I say in the Emirates, you can get things done in a week, while in other places will take you months. And the reason is maybe for me, it feels early days in China when you have governments with a appetite of bringing talent, bringing innovation, and working around it. So, for example, myself, during what I was in the various meetings we had, like on due diligence and looking at the DIFC, Dubai Financial Investment Authority, and this ADGM, I actually met with people in the DIFC, with the FSRA, like the Dubai Financial Service Authority. And I actually sit with them once for 45 minutes, explaining why we wanted to do around digital assets and Kaspa. I showed them the visualizer. I actually
really
discussed them for 45, 50 minutes with actual regulators, and this kind of stuff that very unlikely happened anywhere else. And it's because people have the willingness to look at things with a different lens. Obviously, you have a lot of not just the low tax. The low tax plays an important role, obviously, but it's the access to infrastructure and financial services, which people like the most, and that's why people are choosing either DIFC, ADGM, or VARA for licensing, VASP, and so on. So I see that the ecosystems that they build around that is because they have access to financing and development. Otherwise, you cannot build ecosystems just on pure, statements and financial, like declarations from government saying, "Okay, I want to be the house of licensing," and they don't understand what infrastructure is, or they don't know how to serve a company properly. A 6-month bank account opening, it's just terrible.
That's madness. That's madness. So, all right, I see. So I think you opened the door for something interesting here for me to ask you, which is, we've all seen your photos of flamboyant and luxurious travel photos, and Kaspa travel suitcases. So I see what you were doing in the MENA region, right? Specifically, obviously UAE, as you're mentioning here. So what's happening in that region, broadly speaking?
Yeah. Okay. So I think that the pace of acceleration on the vision of governments, for example, as the Emirate governments, for innovation is something that is worth taking a look. Because you will say, okay, what you can build in a desert, just the desert, right? But how they managed to put together the required infrastructure and incentives to different corporations to achieve various integrations and synergies, that's something that is worth looking into. So from the legal perspective, very early, actually, ADGM, the Abu Dhabi Global Markets Authority, was the one that started licensing and giving the first licenses for virtual asset service providers and regulating financial instruments as well. And then you had the means of the DIFC, as I said, like the assets under management they have is quite sizable, and they are looking at the technology frontier as the new infrastructure frontier. So this is like building data centers, the different infrastructure carriers that are needed to industries to develop. Now they're looking very closely at technology and innovation.
Big part of that region development came from energy sources, right? You can really drive a lot of industries off the back of it. So you think it's because of that, the low cost energy that's driving the innovation in certain sectors?
Okay, so for example, if you look at the work that the DMCC has made in Dubai, the Dubai Commodities Center, and they have brought more than 2,000 trading and exporting companies and investment companies to their ecosystem. So they are building very robust ecosystem within these different jurisdictions, right?
Mm.
Incentivizing industries, incentivizing ports, incentivizing energy development, renewable energy, and the size of such investments is what actually makes this mind blowing. So if you look at DII is a network of stakeholders that they have over 16 years in the MENA region. So they pretty much were together with these governments in building all the existing infrastructure as of now. And that's what I was like very happy. And just a remark there, I didn't present at the event. I was invited to the event.
I see.
I partook the event. I traveled with my own pocket, like I paid my fare ticket and flight tickets and stuff.
Just quickly, who reached out to you? So someone from DII?
No, I discussed. I met Paul and Rory online, so we had a discussion. And after this, they sent me a kindly invitation. I paid for my ticket with a discount, but I partook the event, so I can say that I saw firsthand what was the presentations that they were developed during the event. So for example, Rory made a keynote on Kaspa infrastructure. And it's very important to say that both Rory and Paul, they are putting an immense amount of weight and credibility towards Kaspa. And this is not an easy task, because when you are in a very traditional environment, just trying to discuss crypto and blockchain, it could be seen as like not quite well, or people will very difficult understand the nuances around it. So Kaspa was presented as an infrastructure tool. So for them, that they are very familiar with energy and the energy grid, Kaspa was presented as a digital grid for building all the infrastructure carry innovation that their stakeholders they might require, and that's the means of trading carbon credits, tokenized renewables, and various transactions that are collateralized or backed on energy with gigawatt stablecoin and so on and so forth. So and interestingly enough, the event was co-organized by the government, and the vice minister of energy and petroleum went to the event the second day. He opened the keynote. He sat in the same table as Paul, and in the group picture, because of this protocol, he was in the middle, and next to him was Paul. So the network that the DII has in terms of their partners, their companies that they are over 100 years, like over a century, that they are like leading in the industry, and they are absolutely serious, high regarded corporations with the most credibility, as I said, in the space. For them, being Kaspa being presented among them, that's something that is incredibly relevant somehow. And as to the relationship with KII, I met online Rory and Paul. We had some discussion. Then we met in person. We had a personal meeting as well. We had dinner together at the event. They're fantastic individuals, I have to say. Very, 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 very super, extremely intelligent and very good people. I presented my my initiative, what we wanted to build with LehmanBush. And they agree for KII to have one of the seeds in the... Okay, so LehmanBush will be a fund manager, a C3 fund manager. And below LehmanBush will be the Kaspa fund, which will be a Kaspa qualified investment fund. So it's like a closed fund. This fund will have just the like long-term investment horizon, like Kaspa as a treasury. It won't be doing any other things around it. And for the management of the fund, I am suggesting one of the seats will be from KII. I actually invited Kaspa Ecosystem Foundation as well, KEF, to have a seat. And I would like pretty much someone from the community as an advisory, or some from CAT. I actually reached out to Ashton, and I told him when the time comes, I will just reach out to him and see if they are willing to have a seat as an advisor or something, consultant from the community as well. So the idea of the fund is to open the access to institutional capital to Kaspa. Because why is this relevant? In the UAE, if you want to invest in crypto, you download an app and you just hit it, and that's it. If you're an institution, or like you manage a family office, or you have a pension fund, or you're like any sort of investment accredited investor, if you want to have access to digital assets, is highly regulated. So either in the Dubai area, for example, the IFC, they will let you invest just from the authorized list of, they call it token list approval. Otherwise, you cannot have any, you cannot hold any asset or have any crypto collateral, underlying, if it is not approved or pre-approved by the authority. They're in the process of changing this legislation for the upcoming year. They're making some discussions around it, and that's one of the follow-up meetings I had with these regulators. And while I was pitching Kaspa, and it's a centralized network, so there's no company behind that can make the listing and so on. And they were, and now they might allow invest in like funds or investment companies to allocate up to certain percentage of the treasury in certain one asset. Yeah. But the idea for us was to open the gate of institutional adoption to Kaspa, maybe as the earlier Pantera Capital or Grayscale funds, because we believe that Kaspa should be up there, as a high regarded asset for institutions as well. And yeah, I think that will benefit the ecosystem overall.
Yeah, that's beautiful. So if I understood it correctly, so LehmanBush Capital will have few other investments, and one of the funds will just exclusively hold Kaspa as a treasury asset.
So yeah, the LehmanBush Capital will be a C3 fund manager in Abu Dhabi, and under which we'll have two mandates. We'll have one energy mandate for the Baltic countries and European renewable energy. That's traditional private equity, nothing to do with crypto. And then we will have a qualified investment fund just for Kaspa. And we are targeting, ideally, we're targeting up to $500 million in value.
So just quickly, so when you're saying it'll be a closed fund, so if you're a high wealth individual, you can chip in some capital there, right? How does it work in terms of raising capital?
So the qualified investment fund in ADGM, the minimum ticket, because it's not for retail, it's just for institutions and high net worth individuals. The minimum ticket is $500,000. Is $500,000. It cannot be less. So we wanted to do it in tranches, in $100 million tranches, but we will see how that will play out, because obviously we have to secure over the counter previously and various things to start accumulating gas eventually in the future.
That's exciting, man. So have you raised any capital? Have you guys started the process of raising capital? Or?
We are discussing, that's kind of the issue, because we are discussing with stakeholders. We cannot advertise in something that is not yet approved. So we have been discussing some letters of intent, at this stage, non-binding letter of intent. And eventually, the idea is to grow up from there and try to present this to various stakeholders. I have actually, my idea is to try to reach out to not just institutions, obviously, mostly institutions, but try to reach out to various networks in the blockchain space that are across the UAE. For example, you have the Dubai Blockchain Center or other stakeholders that as well, they have their affiliates or stakeholders in a sense. I presented Kaspa, the visualizer, to the CEO of the Dubai Blockchain Center as well, just before all this drafting structuring was possible. So I think it's down the road. Obviously, you want to secure an anchor investor. That's something we are discussing as of now. There's things that we cannot disclose. We have the discuss also with the custodian, which is a very reputable custodian. We have an NDA with them. We cannot say who it is, but is a good guy. Let's say is an American custodian, almost tier one with a banking license, and they're very good guys and good friends of us in a way. And the reason why is we wanted to do some full custody, like so people don't, like the exchanges, they don't manipulate any of the treasury against the community or so on.
It is a real thing, and it's exciting. It is amazing. So who's going to manage the fund? So are you looking to manage yourself, or are you going to hire a team of people that manage it? Who's going to be managing this specific closed fund?
It will be obviously a team of people. So we are discussing now through various. There is a CFA advisor that might become our CFO. We're discussing that currently. I would like to lead this initiative, but obviously, when it comes to being the CEO, the representative, that's something that the board has to decide. So, because most likely there will be someone much more knowledgeable than I to do this work, and I will be more than happy to the most qualified person to be. But initially, me pushing the boat with a very comprehensive multidisciplinary team, and
yeah, no, this is amazing, and congratulations. Just coming back to, I guess, GII event, because I think we were there at that event. Did it lead to anything specifically for Kaspa or for any of the projects that KII is involved with?
I cannot speak from KII. What I can say, from what I've seen on different emails and conversations I have shared, there is one particular company which was part of the DII event, and they work around securitizing power purchase agreements on with the German government, actually. But that's something. First, I cannot speak of the company, but they looked at the infrastructure and they said that they would like to take a closer look. And ideally, that's one of the intentions from KII to build, for example, Kaspa as for trading energy as a whole, because then you have, for example, you could have
the Zeta exchange.
Zeta exchange, not just around carbon credits, but also around everything that produces cash flow. So, for example, the power purchase agreements, you could securitize those and try to put that on RWAs that are fully permitted, and you have live information data from it, which is kind of cool in a way. So, yeah.
Beautiful. No, I agree with you. I think I've had a session with Paul, and looking forward to having the next one, perhaps. When
wow. Yeah.
But look, Angel, I've already taken over an hour of your time, so I want to wrap this up. What is standing out to you for Kaspa to be successful in 2 to 3 years' time?
Okay, so I think as a decentralized project, Kaspa fits the definition of an asset without an issuer. So that is definitely a good thing. And that was the fair launch model with the 100% decentralization aspect of things is good, because you cannot go after one person, one institution, one entity. And the opposite is also true, that the sense of one person, one institution, one entity, they cannot just crash the project or just, close the gates and that's it. So I think we're very close today, hopefully by the time the video goes out, to reach the 1,000 nodes, public nodes, right?
Almost there, I think, yeah.
And that gives you the answer. Kaspa is unstoppable. Kaspa is decentralized. Kaspa flows like like the wind. So that's the best way.
That's beautiful. Let me ask you one more then, in that case. Why not? So what do you think Kaspa community can do to drive adoption? Because for me, end of the day, it's all about adoption, right? All the things that DII, KII is trying to do, everyone else, I guess, on the DApp side. What do you think we can do, or community can do, to drive Kaspa adoption further?
I mean, so far, I think the community has done great things. The Cassia message. There is a Kaspa decentralized version for social media. There is various, KNS. I think I have it like here, my KNS T-shirt.
You do, right?
Things that are really really cool. But so far, the thing is, I think the community, Kaspa community, is building for the Kaspa community, and I think that's the worst thing that could happen. You should have a market fit that actually makes sense in the overall context of crypto, and not just crypto. Okay, obviously you want to get the bigger market share, but the thing is, what I personally like from other communities, which even they are like very narrow-minded in a way, is they focus, okay, what's the TVL, what's all this kind of metrics and so on, and if you put Kaspa in that mirror, then we're screwed. So hopefully when Eager Labs, gets live and there is like tools that you can just plug and play, I think that the biggest mistake we're making is trying to invent things from scratch and just don't put things out of production. For example, you have incredible tools today that you can just plug and play in Kaspa. I'm not coder of stuff. I mean, I cannot deploy, Chainlink tools in Kaspa, but there's people that most likely they can do this kind of stuff. So if tomorrow or the day after tomorrow you invent something that is better than XYZ project or XYZ tool, okay, just launch it. That's it. Don't wait for you to have this 100% perfect, rounded solution when there is something that you can just use, and then people like ChatGPT can stop call us the poor chain and so on and so forth. So yeah, I think that the thing will be like there is a lot of hanging fruits around the ecosystem. So we should build not just for the Kaspa community, but integrate existing systems with things that are now having most of the adoption and where the most value comes from, and try to present Kaspa's advantages in that context. So if we have a centralized sequencer, how that can benefit XYZ protocol, XYZ project, and so on and so forth.